Yvonne, very quickly, before we get into the numbers, you've just been to Kenya. What was your view on how the economy is doing right now? What was the biggest highlight for you?
All right, the biggest surprise for us was the current account, the fact that it's continued to widen into the first quarter of the year. That was a concern given the significant tightening we saw in the fourth quarter of last year. I think the positive news, though, was that growth seems to be on the upside. We noted ourselves that rains have indeed begun, which suggests that we should see an agricultural recovery this year, which is positive for the growth outlook.
Let's look at that current account deficit because it came in much sharper than what you were expecting, and it's all around the oil price. But there are some positives when you look at that deficit number. The fact that machinery imports are increasing, it's a sign of economic growth. So what are your thoughts on that?
Correct. Despite the fact that fiscal consolidation has begun, we should keep in mind that there are ongoing infrastructure projects, and that's why we're still seeing these strong capital equipment and machinery imports, which, as you rightly said, is one reason why the central bank is not too concerned, because those imports are being used for productive ventures. However, our worry was that the high oil price, and it has increased by around 15% in the first quarter compared to a year ago, that is putting additional pressure on the import bill. In addition, we have had some underperformance on the export side. Tea production is down 20% less than initial projections, and that's of course due to the frost early in the year. And then of course the tea sector has been hit by that levy that was imposed earlier in the year. So you are seeing a current account that is yet to turn around. Yeah.
So what does this mean for the shilling? Because of course we saw that shilling weaken sharply last year. 107 is the level it went to, and it's now at around 83. It's been trading in this well-worn range for some time now. So is there the likelihood of a shilling blowout still there?
I think the risk is if they cut too soon or too sharply, then yes, you are going to see it start to depreciate and move towards 85 to 90 region. Our expectation, given that the indication from the central bank is they should start to cut in the near term, is that you are going to see some moderate weakening. We don't think it will be a sharp depreciation, given that they do plan to cut very modestly as we approach year end.
We're expecting those GDP numbers out for 2011 anytime soon, and we know that the economy grew 4.2% year on year for the first 9 months of 2011. We know that there's been some technical changes to those retail sales numbers. So would that mean that the GDP forecast could have been underestimated?
That is a possibility. What we're hearing now, given that they're releasing that economic survey about middle of next week, is that growth will be around 4.5% when they announce it for the full year. But from what we're hearing on the ground is that due to this technical change in the measurement of retail trade, growth could have been understated. So it could be closer to 5 than 4.5%. And the general news is that the economy did grow despite the drought, particularly the Horn of Africa drought that impacted parts of Kenya. And going into 2012, we expect to remain flat in the 5% region, which is still positive. So the growth outlook is a much more stronger than when we were looking at Kenya, say, 6 to 12 months ago.
In terms of the fiscal stance right now, there have been calls for fiscal consolidation. That has been on the cards. To what extent is it likely that we're going to see in the next budget a strong leaning towards consolidation this year?
There seems to be confidence that that's beginning. One of the good news is that the medium-term plan to reduce public debt to 45% of GDP has already been achieved. That was achieved end of last year. We're sitting of debt of around 43% of GDP from what we're told when we're in Kenya. So it implies that you're already seeing the debt position slow. Spending on the recurrent side is showing evidence of being contained. So the plans to reduce contain spending and to ease pressure, particularly on domestic debt, is already coming through, and that's likely to be sustained over the medium term. Yes, we have an election coming up, so that could slow in the short term, but in terms of the medium term outlook, it is positive.
Yvonne, we've got that 5% growth forecast around that right now. What are the biggest risks? What are the biggest risks to the downside for that number?
Okay. I mentioned rains have begun, but one of the biggest concerns on where there is that they are a bit too heavy in parts of the country, which could also be negative for crop production. So that's one of the risks to the agriculture outlook this year. Secondly, of course, if the oil price remains as high as it was in the first quarter, but that I mean above 120, then yes, that would be a dampener on the cost of production and to keep the current account position poor, basically.